and then you can scale up as you take your profit. So this is exactly what
chart, and the market is moving up. Then you can see it moved down a little bit. It's sort of like a flag, and then it moved back up again. Now, if you look at each individual bar, you'll see there's a lot of noise happening. Look at this, and when you zoom out, the direction becomes a little more clearer. Now stare at this chart for just a second, and I'll change the same chart into a Heikin-Ashi chart. Isn't it simpler now? Look at each individual bar. You can see only green and only red, and I guess that makes all the difference. So if you look at this very carefully, right from May all the way till September, till start of 2022, there are only possibly 3 places or maybe 4 places where the entire trend had a few red bars. Everywhere else, it was green. And yes, if the bar is green, the trend is up. If the bar turns red, the trend may be reversing. It's that simple. It basically takes an average of the entire movement of that week, since we're using a weekly chart. So let's see how this works. So there are 3 types of Heikin-Ashi charts. We call them HA charts as well. The first is a green candle with no lower wick. It's pretty simple. You have a green candle with no lower wick. There could be some upper wick. So I'll call this number 1. I'll explain this in just a bit. There is a second kind of bar called a red candle with no upper wick. So here, down. So this is a green and this is a red. And then there is a third kind of bar called a candle with a Heikin-Ashi candle with wicks on either side. Now, very simply put, when you see a green bar with no lower wick, this is bullish. And when you see a red bar with just a lower wick, this is bearish. Now, we will see the calculation behind this without looking at the calculation, just by looking at the bars. But basically, the Heikin-Ashi makes it easier for you to know whether it's a bullish move or not. Let me give you an example. Imagine the market is moving upwards. And one day, the market gaps up and you get a huge red bar. Now, to the naked eye, this will seem like there is a lot of selling pressure. But if you really calculate and think about it, if you add the gap up and the end close, it's still a bullish candle. It may be red, but the momentum is still up. Now, when you use candlesticks, sometimes you may lose this information or you may misinterpret it. And that's interesting. The Heikin-Ashi won't show that red candle at all. It'll show a green candle. And that just makes life a lot easier. Now, if you've been trading and looking at candlesticks for a long time, you will find Heikin-Ashi charts super pissing off. Just like me. I've been seeing candlestick charts for a long time. I can tell if it's bullish or not. I don't need a Heikin-Ashi chart to tell me the trend is up. I can see it. It's price action. But if you're in a chart with wicks on either side, this